There's essentially two different ways you can actually trade and scalp at the same time with two different risk management strategies. And that's basically what we're going to be talking about in this video today. So just jumping straight into it, I'm actually going to get into one of my favorite pairs, which is oil. And I want you guys to understand a couple of things before we start this. And the most important thing about scalping is that you're in and out of different trades throughout the entire time. So when we're looking at smaller time frames, essentially we're only looking at these smaller time frames just to look for entries. However, when we're trying to project the idea structure of the trend, if it's either up or if it's either a down, we're trying to determine obviously what we should be doing on a lower scale. So if anything from the 4 hour or anything from the 1 hour is typically where we're basically doing most of our structuring analysis. So one thing that I look for when it comes to these trends, downtrends or uptrends, is pretty famous word is called displacement. And basically what displacement is what we call it a very powerful, aggressive, engulfing ×2 candle that is surpassing the previous lows. So if we kind of look at this level here and we're like, all right guys, we notice that we have a very structural low here, right? This is our lower low right here. And then we see this aggressive candle. This is what we call our displacement, also known as just a power move candle going down. So essentially what I am looking for are these candles to help me determine if this is still a downtrend. Essentially, this is one way out of many other ways, but this is one way I find that is very accurate in today's market. So when we're looking at this particular move, our idea, like I said, is to look for sells. However, there's two different risk strategies that you guys can follow with this strategy. So the first one would be an aggressive sell. Are you looking to enter right when you see this displacement? If so, you have to be very cautious of where you put your stop loss, because the idea is get in soon, get in now, and take as much profits as I can with just this first idea of risk. But if you do this, like I said, the idea is to have your stop loss just above that structural high, meaning if this was your lower low and you had a bunch of wicks here, 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 and here, anywhere where you see that zone of demand or supply, essentially your stop loss should just be pips above that. Entry would be down here. Now, like I said, the beauty of this one is you do get in sooner than later. You do catch more pips, but the con and the big risk is this trade can still potentially go like that. So the second risk strategy that you guys can follow is a little different. With this one, you can now actually wait on that displacement candle to close, which is this candle right here. And when that candle does happen, the next step that you do want to focus on is basically waiting on a pullback. Now, the idea of waiting on this pullback is to determine that the structure that it formed breaking this previous low is basically telling us that it's not going to break this previous high, which is here, right? So right here, we're basically looking at a higher low or lower high, depending on how we're looking at this, but we're going to say lower high since this is a downtrend. And essentially, we're just waiting on that power engulfing candle to basically close this previous candle to determine this move. Now, there's more different confluences that you can implement into this to help you get even a tighter entry. And this is also something called the moving average. And I'm going to show you guys this in the live charts in a little bit, just doing a back testing idea. But essentially what we're doing here is we're taking this engulfing candle and we're using this engulfing candle to enter in the trade. However, sometimes this won't be the move that happens. Sometimes the candles could just keep falling, and then eventually we will get that engulfing candle all the way down here, and then we're only catching a little bit of that move and a little bit of that play. Because one thing that we do, and there's two ways that you can look for your take profits, but one concept is using your Fibonacci, which I'm gonna show you guys that too in a bit. Or ideally, the other concept here is to essentially use previous structure from maybe back data. Let's say you're doing a 4-hour time frame and you might have a very strong support level or resistance level or very strong major key level. Essentially, you can even write it all the way down there. Or another beauty of this is you can even, if you're trailing this, you can even wait until the market breaks this previous high with a very aggressive candle. If you're seeing a lot of these wicks and they're not breaking structure, then essentially it's best just to stay in the trade, because it's 9 times out of 10 we're still looking for more sellers in the market. So that being said, I do want to show you what this could look like in a live market. So now we're looking at, like I said, oil 4-hour or 15-minute time frame. So we see that clearly market created lows, right? And we see that all of this is our lows. Now, every low that market did create with this line is pretty much my lower lows and lower highs. You guys essentially see that we had a very strong aggressive push right here, right, with this candle right here. So this basically clearly shows that the sellers are strong, the buyers aren't even powered to work at all, right? Even though you might consider, well, look, it is going up. Maybe once again, higher time frames to pick this and figure this out is key. So let's say that now we notice it is dropping and we see that we got very aggressive candles. We're getting these engulfing candles just closing. These are our type of candles I'm looking for. Now I'm interested in a sell. So now let's say you want to enter in this trade, but you want to use your Fibonacci to determine your potential new lows, which is also known as finding your TP1 and TP2. Essentially, what you would need to first do is identify the range. Identifying this range is basically quite simple. What a range looks like is anywhere from the A point to the B point of the top of the range or the top of the trend to the end of the trend. So it's either where you see the new high or even the new low. So essentially what we are trying to figure out even here is creating that picture. And we see that this right here is our new high, and this right here, all of this right here is our new low. So I'm now going to draw a Fibonacci from this new high and this new low to kind of help me paint this picture of where potentially my TPs can be, which is my red lines here, and also potentially where market could pull to continue down, which is this equilibrium 50% mark. So anything above this Fibonacci, which is my 50% mark, is what I like to call a valid or even a accurate order block level, fair value gap level, or supply or demand level, or support resistance, a major key level, any structure strategy that exists out there. I'm just looking for market to tap into here. I'm keeping it that simple. I don't even care about all this other order blocks or anything. Just wanted to come above this 50 to give me more accuracy that this is a good trend. So now essentially, once we determine that move, we're just waiting on market to possibly hit that mark, and as you see, it clearly did. Now here's where things get tricky. You see that once again, I had said earlier that you need these displacement candles, you need these aggressive candles to determine that the market is essentially going to break the other way, right? So you clearly see here that this was an aggressive candle to the downside. Now, this isn't going to determine my move to go up, and the reason being is because we had way more sellers making new lows and buyers making new highs. So this isn't going to confirm anything. If anything, this could be more of a potential setup to look for the sales now, because this is what we like to call stop hunt. A lot of people call it that. A lot of people call it a buy stop. A lot of people call it liquidity phase. That's what I call it. A lot of people call it liquidity sweep and so forth, right? So if we look at it in a different perspective, we see that this right here is essentially that. It's just swept all this liquidity out from pretty much all of this in this area here. So now that we see that, we're basically essentially just waiting on that power engulfing candle, which could be this candle right here. Now remember what I said earlier about entries is that it's vital for one to understand where the trend is at, and also to understand everything about the structure as far as demand, supply, and so forth. So if we look left and we see that we have a lot of demand supply over here, we can essentially say, all right, if we enter here, maybe we can put our stop loss above this high right here, and then we can ride this trade all the way down to TP1 or even TP2. Now, one thing that I talk about a lot, and I used to talk about in a lot of my videos, is that don't try to get in the trade if it's not even a one-on-one trade, right? And if you clearly see here, this don't even make sense as far as a key structure, because we're not technically at a one-on-one. So we can essentially void this trade out just because our risk, which is based off of this trading guide. And by the way, guys, if you're interested in getting this trading guide, you can actually get it down below. There's a link to get this trading guide. But basically, in my trading plan, I say here, if it's not a one-on-one trade, I shouldn't even be trading it. I can look for a better setup. It's almost like me investing into something. If it's not a fair investment or risk ratio, I don't even want to get in it. But let's just play this game and say we decided to, right? I do want to show you guys the difference if we do and if we don't. Sometimes it works, sometimes it doesn't, but sticking to your plan is key. So let's say we do decide to get in this trade, but we want to take it to TP1 and not TP2. What happens is, let's see if it hits our TP, and as you see, yes, it does hit our TP. Now you might also be thinking, well, if this is the case, why should I not get in this trade if it's not a one-on-one? Well, essentially, guys, the idea here is to make sure your trades make sense in paper, right? If you're risking $100 to make $20, but you're risking $100, if that makes sense, is that something you want to do? And if it is, that's fine. Just make sure you understand that your risk is more than your reward, and it should be less risk, more reward. So that's pretty much essentially how that part goes. But once again, let's go back to this, and let's say that yes, you decided to take this trade even all the way up to TP2. The beauty of this concept is you can ride these trades, trail these stops. It really just depends on how you want to go about your risk. But as you see, we pretty much smacked that with that right there. But the key here is, guys, if you were to enter after you seen this liquidity sweep, after it broke and took out all of these highs, came into a fair value gap, essentially came in even into a POI level, you could have took this trade here, or you could have even took it here. The beauty of taking it here is, like I said, you have a less risk. Here you pretty much have to be careful, because this is what happens a lot of times when lows get broken. Basically, a low is broken 10 times out of 10 is always going to create a new high, not even 9 times out of 10, because market does this all the time. It creates a low, comes up, pullbacks, right? What we like to call, you can call this either retracement, you can call this either exhaustion, but regardless, market comes up, comes back down. The moment it comes down, it's going right back up, coming down, going right back up. And a lot of times these levels are following a Fibonacci sequence, and a lot of people don't realize that 9 times out of 10 when the market hits that first or second sequence, it is going to retrace back, it is going to come into exhaustion, it is going to pull back up for a bit to continue down to finish that trend, because once again, market just doesn't go straight down. That's just not happening. So in my eyes and in my mind, I'm aware of this, and I'm just like, I'd rather wait, because if we were to play this game of, all right, let's see what the previous range, which was this to here, I can draw my fibs out, and I'm guaranteeing you that these two levels and this level right here is matching probably TP2 of a Fibonacci sequence. And as you clearly see, that is exactly what it is. Pretty much reached this level right here, and it pulled back. So in my eyes, I'm like, I can wait. I'll wait it out, because at the end of the day, I can see this. So that being said, if you guys like these type of videos, make sure you comment down below. Please give me more of these videos. And then if you guys are interested in any what we're offering, once again, Copy Crusher is available for those that's new to trading, or even if you have been trading and you still are confused and you want to follow one of your favorite traders, you can do that through Copy Crusher with all the data showing. Also, if you're interested in Telegram or Discord signals, you're now able to use Copy Crusher to copy from Discord or even Telegram automatically to your trading account without you having to manually go and do it yourself. So that's that. Also, it's a regular copier as any other copier out there. And then also you are able to do like MT4, MT5 to Trade Locker or DX trades without even downloading any EA. So we are the first ones to do that in the world, which I'm excited for that. So if you guys are interested in any of that, make sure you sign up down below. The wait list is available now, and then hopefully within a couple months or even a couple weeks, whatever, while you're watching this video, we should be in launch stage. So if you want to, you can also sign up down below as well. Other than that, I'll see you guys in my next video. Your boy Solo. Peace.